Hi, it's Martin from Real Stock Value, and today I will talk about the motivation behind these two. The first question is why to invest? And the answer is that everybody is an investor. Most people just don't know it. So even if you hold your money under your mattress, even then you are an investor. So in that case, you're invested in the currency that you're holding on. If you put that same money into a bank, then you're also an investor of the bank. And this crisis in Greece and Cyprus clearly showed us that in that case, you're also an investor in the country where you're holding your money. If you keep your money in the bank, then today in developed countries, you don't get any returns on your money. The interest rates are just so low that they are really close to zero, and you also have high fees at the banks, and we also have inflation. So the minuscule returns that you get as interest rates are more than eaten away by fees and inflation. So you need some kind of other investment vehicle, and the stock market is one of the possibilities. Okay, so great, the stock market is a place to invest, but what should you do if you don't know too much about investment? So the answer is quite obvious. First of all, you need to educate yourself. There is just no other way around it. You need to educate yourself about investing, otherwise you will get ripped off. So what are the possibilities to invest? One of the possibilities would be to give your money to a hedge fund or to a stockbroker or to an index. Now, let's compare these possibilities. So if you give your money to a hedge fund, then you need to pay high fees, and also 95% of the hedge funds are outperformed by the S&P 500 index. So there is no really good reason why you should give your money to a hedge fund. You will be better off if you just keep your money in an index. You could also give your money to a local stockbroker. However, if your local stockbroker would be that good and he could outperform the market, then obviously he would not be your local stockbroker. I would like to include just a quote here from Robert Kiyosaki. Why shouldn't you give your money to a local stockbroker? And the quote goes like this: they are called brokers because they are broker than you. Another possibility is to deploy technical analysis and invest in that way. The problem with that is that about 60% of the time is right. However, you still can lose more money on the remaining 40%, and you also need to pay the fees. So in most cases, people who are using technical analysis will lose money on investing. The Real Stock Value tool suggests another approach, which is value investing. And value investing was proven to be the right way to go by all really successful investors like Jimmy Rogers, Warren Buffett, Mark Faber, Ben Graham. So all the really successful long-term investors are value investors. And the Real Stock Value tool differs from any other tool by using the insight of these really successful investors and combine them into a single tool. So it gives you a hint when should you invest and when should you avoid the stock market. I would like to include another quote here from Warren Buffett. Long ago, Ben Graham told me that price is what you pay, value is what you get. Whenever we are talking about stocks or stocks, I like to buy quality merchandise when it's marked down. So the main purpose of investing is to find a good company and buy them when they are priced down because of some temporary issues. The main purpose of this tool is to educate people so they learn more about investing, to promote value investing, because if more people would apply value investing instead of technical analysis based investing, then the stock market would be much more stable, and to help retail investors make educated decisions when to start investing and when it's a good idea to take some money off the table. Thank you. Please leave some feedback about the tool so we can improve it and help even more people